Good evening, everybody. All right. Hope everybody's having a nice spring evening. We got a kind of a cold, yucky night here in Pittsburgh. But tonight, I've already put Vince's background up. Got the great pleasure of having him here tonight. He's been a professional trader for decades, and he's got a bunch of unique, special trading methods I think everybody will be interested in. So with that, Vince, welcome to the Candlestick Forum. We're anxious to see your techniques.
Thank you so much, Steve. I appreciate you doing this and very glad to be with all of you tonight. Thanks for joining us, everyone. Hope everyone's having a great evening. I've got a strategy that I've been using for quite some time that I want to share with you tonight. It's called our winning momentum strategy, and it's all based on technicals and specifically based on trend and momentum. So I think you'll enjoy it. At least I hope you'll enjoy it. As I said, it's been a system we've been working with for a while now. As Steve said, I'm Vince Vora. I'm the head trader here at Trading Winds, and for those of you who may not know us, I've been trading for 30 years now, and I've actually traded on exchanges all around the world, but most recently I've been focusing on coaching and helping our Trading Winds students. These are just some of the trades we've highlighted for our members recently. These are per share amounts, not profit amounts, and we're going to go through these and many, many others as we go through the presentation, and I'm going to share with you a unique strategy that we came up with years ago, and that is now being used by retail traders such as yourself, as well as many hedge funds. Please do remember that trading can be risky, so I highly encourage you not to trade with real money until you're completely comfortable with the system that you are using. Now, before I get started, I did want to ask a poll question. How many of you have actually seen me present at an event or a webinar such as this before? I usually ask this before every presentation. If you can just take a few seconds and type a yes or a no into the chat box, I'd really appreciate it. Thank you so much. Actually, we see a good mix. Great, I do see a couple of names that I recognize. Excellent. Well, thanks again for being with us, everyone, and thanks for answering the question. Now, in tonight's presentation, I want to start off by talking a bit about the current state of the markets. It's been very challenging, so I want to touch on that at the very beginning, and then share with you the three components of this system that, when put together, will help you avoid many of these current challenges. And I'm not only going to show you how it works and why it works, but more importantly, how this can work for you. And then near the end, hopefully we'll have time for plenty of Q&A. I have another question for you, though. Before I cover some of the common challenges that I've seen and our members have seen recently, I wanted to ask you, what has been your biggest challenge in this current market? Please take 15-20 seconds and type that into the chat. I think it's worth sharing with the group. Usually there's some very common issues, and as I mentioned, this market has been much different than we've been used to for the past several years. I've traded a long time, and rarely do we see a market with this type of volatility, at least such a sustained period of volatility. And there you go, Nancy is saying evading volatility. Absolutely. That is a very common one for sure. Peter says making money. Well, Peter, hopefully once I share this with you, you'll be able to start making money consistently. Taking profits. Thanks, Joseph. Another very key point. That's a very common challenge for many traders. So excellent. Failed patterns, chop. Yeah, absolutely. Lots of chop. Okay, great. Thanks a lot, everyone. We'll cover many of those as we go through. But let me share some of the common challenges that I've seen and heard from many of our students over the last few months. You know, and this is one of the challenges that is a challenge no matter what kind of market environment you're in, but especially in this type of market, it is very difficult to be able to quickly spot the current trend and whether or not you have momentum on your side. Well, with the system that we've developed, you'll be able to see whether you're in a trend or not, and whether you have momentum on your side in a split second when you bring up those charts. As I believe it was Joseph that mentioned, staying in a trade is definitely a challenge for many people. But what this comes down to is trading with the right tools and the right rules. When you wrap the right rules around it, you actually have a method that will allow you to stay in that trade for the duration of that trade. Now, one of the most important parts of trading is managing a trade once you're in it. Not so much selecting the entry, but managing that trade. And for you to be consistently profitable, you need to form the right habits. Again, the tools and the rules we use around this strategy will almost force you to form those habits, okay? So, as I mentioned earlier, there's 3 components to the strategy, very simple ones, indicators that I'm sure you're very familiar with. The first one is the 20-period simple moving average. And we have tested this and traded it with weighted exponential averages, different time periods, you name it. We've always come back to the 20-period simple moving average because it simply works best. Also, and I will do my best to pronounce this correctly, it's the Ichimoku Kinko Hyo, I believe. This is a very strong indicator, actually, a very popular one over in Asia for many years that's actually used as a strategy completely on its own. We use a very stripped down version, and we use it to help us identify trend very quickly, and I'll show you exactly how we do that when we get to the charts. Lastly, the relative strength index, a very popular indicator that's normally used to identify extreme areas of overbought and oversold conditions. Well, we use it slightly differently with a slightly different setting, which I'll give you in a moment. And this is actually going to help us identify our setup bar, okay? So what can this system do? Well, as I mentioned, it helps you immediately identify trend and momentum, but more importantly, it helps you avoid counter trend trading. Do all of you know what I mean by counter trend trading? That's one of the biggest mistakes a trader can make, especially a young trader, trading against the trend. And this will help you avoid that. I'll show you as we get to the charts. Also, especially if you're working with a smaller account, one of your main priorities as a trader should be to minimize risk. Well, again, with the rules that we wrap around this, we make sure our losses are extremely small while we allow our winners to continue running. And again, I'll show you many examples. Also with the system, a real benefit is there's no subjectivity to it whatsoever. It is very mechanical and has very clear entry and exit points. Now, what can this do for you? Well, not only will it allow you, identify great trading opportunities for you regardless of the time frame that you're trading, but because we trade with the trend, it's going to help you select some of the higher probability trade setups. And you'll see in a minute just how simple it is to not only spot, but to manage, because there are very few rules with this strategy. Before I get to the actual rules, I did want to go over our set of money management rules. This is a key part that is a key component and really should be to any trading strategy, especially this one. And when you first sit down to trade, you really got to make sure that you have a clear mind and you're feeling pretty good that day. I've seen many traders make some horrible mistakes on days where they're not feeling very well. So always make sure that you're feeling good and have a clear mind. And then it becomes a matter of trading with an amount that doesn't worry you at all. Again, how you manage that trade is super important. And if you're worried about the amount of money you have in there, you won't be able to manage it appropriately. So always trade with an amount that feels completely insignificant to you. When it comes to managing risk, very simply, we never allow ourselves to place more than 5% of our account balance in any one trade. So no matter what, worst case scenario, the whole trade blows up on us, it has a very small impact on our overall account. Another problem whenever you're trading, a real challenge, is dealing with those unexpected events. And every once in a while it's going to happen. There's going to be some major news announcement that really drives the market against you. So we always make sure that we have 50% of our account balance in reserve for two reasons. Number one, to minimize such a loss should it happen. But if it does, we then still have half of our account available to put back into the markets and make up for those losses. And especially in today's markets, you really do need to be selective. You need to focus on the 1 or 2 highest probability trade setups for whatever time frame you're trading, and spread your trades out. And we'll go through many examples here. We're one slide away from this. I just wanted to share a couple of key rules with you, or a couple of key sayings that we have that we follow religiously. Number 1, you will never go broke taking profits. And this is meant more for those of you that are just starting out. As you gain more and more experience in the market, you will learn to remain in a trade a little longer each time. But for those of you just starting out, when you have those profits, get used to banking them, okay? I've heard many times that you will definitely go broke taking small profits. Well, that's not the case with this system. Because of the way we limit and reduce our risk, you'll still do very well taking small profits. But this is the point that I really want you to walk away with. And I've coached thousands of students, but this is so important. I truly believe in it. You really need to understand that trading is not about whether you yourself are right or wrong. That's important, okay? But it is all about how you manage your trade, and therefore all about how much money you make when you're right versus how much money you lose when you're wrong. Many people focus on win rates. And I always love to tell the story that many years ago, I worked shoulder to shoulder with someone that had a win rate of 38%, yet he made millions. Why? Because he limited his losses and he allowed his winners to run. Easier said than done, but I'm going to share with you a system that has, with the indicators that we use, the combination and those rules allow you to do exactly that. Okay, so let's get to the strategy. Let me bring up my charts here and share this with you. Now, I will say that this system works on any time frame, okay, be it a 5-minute, a 15-minute, a daily, weekly, monthly, it really doesn't matter, in any market. In other words, stocks, forex, pairs, futures contracts, you name it. We'll go through many examples, and we're going to get to a point in the presentation where I'm going to ask you to type in some symbols, okay, and I'll bring up those and we can all have a look at how the system would have performed on those particular symbols. But let me start by telling you what we have on here and what you're looking at. So the line in blue here, this is the 20-period simple moving average, okay? And the reason we use this really is to help us identify momentum. Momentum can be judged quickly and easily based on either the slope of the candles, as you see right here. You know, we take a big dip, obviously we're trending lower here, but that moving average does that for you. And really, the real key here is not these areas where we're just quickly moving in one direction or the other, but really where it comes in handy is the pullback. So in other words, if you look up in here, we quickly dropped here, a very significant slope here, a very quick drop, but then almost as quickly we got a pullback. But have a look at that 20-period moving average throughout, okay? It maintained that slope lower, and that's the real key. You know, when you're judging the slope of the candles to judge momentum, you can easily mistaken a pullback as upward momentum. But if that moving average is still sloping lower, then it helps you understand that this merely is nothing more than a pullback and a temporary consolidation before a continuation of that move. And that's really the real reason why we use that moving average. Now, obviously, the steeper the slope, the better. The more significant that slope during the trade setup, the better and the stronger it will be. The shaded area here, this is the cloud. Now, if any of you are familiar with the Ichimoku cloud indicator, you'll know that normally there's many other lines associated with this, many other moving averages that come along with that indicator. Well, we've stripped those off and simply use the cloud portion to help us identify trend. And this is how we do so in a split second. So if the candles and the moving average are above the cloud, we consider that an uptrend. If the candles and the moving average are below the cloud, we consider that a downtrend. And if one or both are overlapping that cloud, we consider that a period of consolidation, and we do not want to take trades with this system during one of those times, okay? So when you first bring up a chart, you're going to look to your far right, the most recent candle, okay? So can we quickly spot trend here? Are we above or below the cloud? We're clearly above. So we can say we have an uptrend. Do we have momentum on our side? Well, not so much. That momentum has gone kind of flat. Okay, so in this case, we'd move on and look for something else. But if we had both in place, okay, we then would employ our third indicator, which is the RSI. Now, as I mentioned earlier, the Relative Strength Index indicator is normally used to identify extreme areas of overbought and oversold conditions. So normally, there would be a line drawn at the 70 or 80 level here, and another one at the 20 or 30 level. And whenever this red line would get below that 20 line, we'd consider that oversold, and we would expect the market to bounce at some point. If that red line moved above that 70 or 80 line, we'd consider that overbought, and we would expect a bit of a pullback. Well, we use it slightly differently. We remove those lines, and we draw one right down the middle at the 50 level. And we're going to be using the RSI to help us pinpoint those entries. So this is what we're going to be looking for. This is the setup here, and I'll describe the long setup first. What you're going to be looking for when you bring up a chart is, for obviously, for a long trend, you're going to be looking for an uptrend here, meaning candles and moving average above the cloud. Second, you want a slope in that 20, an upward slope. And again, the more significant that slope, the better. Now, when you have those two conditions, what you want to do is wait for some type of pullback, okay? Like here, for example, or here, okay? Wait for some type of pullback. And then as soon as you see the start of that pullback, you want to turn your attention to the RSI. And for a long trade, what you're looking for is a cross from below that 50 line back to above the 50 line on that RSI. And the candle where that happens is what we will call our setup candle. So if you look at my crosshairs and I hover over this little red candle here, you'll see that at the time we're pretty much below it, or right around that 50. While on the next candle here, we're clearly above the 50 line on the RSI. So that would be identified as our setup candle, which is right here. And I can zoom in for all of you in this section here, just so you can see it a little clear, right in there. So once we've identified our setup candle, all we have to do for a long trade is mark the high of that candle and wait for a trade above it. As soon as we get a trade one tick or 1 penny above the absolute high of that setup candle, that's our trigger into the trade. Our stop would go just below the most recent low. In this case would be right over here. Now, the stop cannot go below the same candle, okay? But it's usually 1 or 2 candles behind where that previous low is. So it's usually a very tight stop. Now, there's a couple of key rules here that you need to be aware of. Number one, once you've identified that setup candle, if the stock or the Forex pair, whatever it is you're trading, trades below the low of that setup candle first, we want to disqualify that trade, okay? And also, if 2 more candles go by, or close, I should say, and we still have not breached the high of that setup candle, you also want to disqualify that trade. Okay? Reason being is, obviously, momentum wasn't as strong as we first thought. Okay? But once we have that trade above the high, we're now in that trade, we set our stop level, and now it just becomes a matter of managing that trade. And what you will notice is the majority of the trades that trigger will tend to move in our favor immediately. Why? That's because of the trend. Okay? That's because of the trend. And that's the real benefit of trading with trend and momentum on your side. Half the battle's already won. And I'm sure those of you who trade options, actually, let me ask, how many of you actually trade options on a regular basis? Because if you do, not only can you leverage this, but great, thanks Roger, Jason, Michael, yeah, many of you, usual. Options have become much more popular in the last several years. Well, you can all relate that if you were to get into a trade with an option and it starts going against you immediately, for you to make back that loss in premium and actually turn a profit on that trade will require a much greater move in your direction to do so. So if you have something that triggers and moves in your favor immediately, it's hugely important. And it's also important from a psychological standpoint, from managing that trade. If you're in profit right away, you're going to be relaxed. You're going to be able to manage that trade much easier than you would if it went against you, okay? So that, in a nutshell, is the entry criteria for a long trade. And we'll go through many more examples, and I'll keep repeating it, all right? But let's go through a short trade. But before I do, I want to highlight one thing. There's one thing that you should always keep an eye out for, and that is the 20-period moving average moving from one side of the cloud to the other. And not just that, but whether or not it does so with a slope, because that's huge. If it moves from one end to the other, it doesn't matter which direction. The point is, if it crosses the cloud with a slope there, it usually leads to an extended move in that direction. So this is your heads up right here that something is coming. So initially when you moved above that cloud with the candles here, okay, until we saw that the moving average move through, this really didn't mean much to us. As soon as that cleared it and had a slope, now we were interested. We wait for that pullback, and then we turn our attention to the R sign. We wait for that cross from below to above. Now, one other thing, the setup candle, when we identify that setup candle, it doesn't really matter if it is in front of the moving average, if it's overlapping the moving average, or if it's below the moving average. What matters is that at the time you identify that setup candle, that we still have an appropriate slope in our direction, okay? Because momentum is key. We do not want to trade without it. Now, the rules for a short trade are the exact opposite. In other words, if you look back in here on Under Armour, last November, we got a very strong cross through that cloud with a very significant downward slope on that moving average. So we knew a bigger move was about to happen. Now all we needed to do was wait for a proper setup. So we flushed lower, we pulled back here, and during this pullback, we turn our attention to the RSI. And you can see that it moved back above that 50 line. And then once it crossed back below, okay, the candle that crosses back below, that's our setup candle. So, which is right here, this big red candle right here. And then once we identify that candle, what are we looking for? We're just waiting for a cross or a trade, I should say, below the absolute low of that candle. Now, I wanted to use this as the example because of this gap. How do you handle a setup or a trigger when it happens on a gap? Okay? Because remember, where does our stop loss go on this trade? It goes just above the most recent high, which is usually one or two candles away, which is this candle here. So it's very tight, but normally when you're assessing your risk on the trade, you're going to go from the open, or I should say your entry point, to the stop, and that's what you would measure. That would be your risk. But if it gaps lower, you're now going to get in down here, right? So now you have to reassess your risk because it's going to be actually from here, this point, to there. So it's going to be slightly larger risk. Now, if you're comfortable with it, not a problem. Continue taking that trade. If it's too much risk for you, ignore it, move past it, look for another setup. There will be plenty of setups using this strategy. Okay? Otherwise, once you're in, you identify your stop level and off it goes. And again, you can see just how sharp of a move results. Why? Momentum. That's why. Clear momentum. So always when you're dealing with, when you're looking at that 20, if it's a long trade, you want a significant slope. I always visually look for about a 45-degree angle or higher. That's what I would consider a very significant slope. Okay? And it's the same thing to the downside. Okay? looking for about a 45-degree slope. That's ideal. Sure, there's trades that have slightly less momentum, and that's okay. It depends, how everything else lines up as well, but the more momentum you have on your side, the better. Let's look at a few other trades. So CMG, for example. Here, let's look at CMG. Now, if you all remember, late last year, they got into some trouble. They had some E. coli breakouts at their restaurants, and the media was all over them, and they started to trade lower. Now, look at the significance of this slope. Is that momentum? That's very strong momentum. And even as it went through some pullbacks here, okay, you can see that the line, barely moved at all. It certainly did not flatten out. We still had significant momentum. So once we get that pullback, what are we looking for? We're looking for a cross from above back below the moving average, right? So in this case, the 50 line on the RSI. So in this case, this candle here is our setup candle, this little one right in here. Where does our stop go? Just above the most recent high. Right in here, okay? And now, this is why we don't put our stop on the other side of the same candle, okay? Because we have strategies where we don't want to risk more than the range of the one candle, and we put our stop there. But for this one, we don't. Why? Because there are times where we get what we call a double dip on the RSI. In other words, it'll come up, it'll cross below, then it'll come back up again and cross below. Those are actually very powerful. So for short trades, they look like the letter M. For long trades, they look like the letter W. Those are some of your most powerful setups. So we don't mind that it pulls back again. We just want to give ourselves enough of a buffer not to get stopped out. But even if we did get stopped out here, we'd be more than happy to jump right back in here. Because again, this is what typically happens with many of these. Look at that steep drop. And when you get something that is in the news, has negative press, has other issues, then it just becomes an even easier trade. But what this strategy is actually doing is selecting the safe areas to trade. So you may look at this and say, well, you missed this whole portion up here. Well, yes, we did. But what we're concerned with is putting the odds in our favor, stacking them in our favor, and taking very, very safe trades. I'm an extremely conservative trader myself, and that's what this does for us. It ensures that we have trend and momentum on our side before we enter, and then we just take advantage. We jump on that bandwagon and ride that wave. And here again, we tried to make a comeback. What happened after? Look at that move through that cloud. Okay? Look at that move from one side to the other. Gave us a heads up. Then what happened? We get a bit of a pullback, which we love. Now you always should keep track of the earnings date. You never want to jump in too close to earnings. I like to be out before earnings myself, okay? But as you can see here, this one, I would have personally not traded this one because we were too close to earnings, but the setup is the same, okay? You can see here that the moving average kind of flattened out a little. Wasn't completely flat, but kind of did. But if you're even trying to decide, is that flat, is it not, you should not take that trade, okay? You want momentum on your side. Now, as I mentioned earlier, this works on all instruments as well as all time frames. We can drop this to a 1 hour and we'll find setups along the way, just like in here. Just a nice easy retracement and boom, there we go. 4 or 5 straight candles down in a row. We can look at a 15-minute and right up in here. And these are some of the best. Now, this one didn't have very sharp momentum at the time, but some of the best setups happen as soon as you come through that cloud. They're quite powerful. A 5-minute as well. The real nice thing here, here's a couple on the 5-minute. As with any technical, strategy based on technicals, the higher the time frame, the stronger this works. So as we go through this, I'll also show you weekly charts, monthly charts, we'll show you some Forex. Let's look at Forex. How many of you trade Forex? Let's have a look at a few Forex pairs. Feel free to type in a symbol if you want me to have a look at it, and we'll start going through it. Here's the Euro British Pound, and again, the real key here, the heads up, was how we crossed through that cloud with slope here. Then we just patiently wait for a pullback. Boom, there's that cross. There's one entry. There's another, right? Now this one here happened during a flat MA. We don't want to touch that, okay? We don't want to touch that. And you may miss the odd move. That doesn't matter. There's plenty of setups to go. The key is to take the safe ones, these high probability setups. Now, if you're more of an aggressive trader, you can add to your position with each one of these dips and crosses, okay? Or if you're like me and you're a little more conservative, you can just hold on to your original position and use these as further confirmation that you're in the right trade. Ralph is asking for USD CAD. Let's have a look at USD CAD, and feel free to ask for the time frame as well. Let me just type that in, USD CAD. There we go. Again, so if we look at this right now, right? Let's look at the most recent bar. Can we quickly spot trend and momentum? Can anyone tell me, do we have trend and do we have momentum? How easy and how quick is it for you to spot? Yes or no? Right? Yes, absolutely. Thanks, Bob. We have downward momentum. We have a downtrend and we have momentum on our side. Very quick and easy. So now we would put this on a watch list and just wait for a pullback to start. And if we saw that, we focus our attention on the RSI. And in this case, we wait for it to move above that 50 line and then back below. As soon as it moves back below, that's our setup candle. You look back in here, look, we had that move through the cloud with momentum, right? We wait for a pullback. What happens down here? Boom, it crosses from below back to above. That's our setup candle. We cross, off we go, right? So it's as simple as that. And believe me, you'll pick this up in no time and be able to trade with it. Let's see. Geo, or I believe it's Geo, is asking for the Qs on a daily. Let's look at QQQ here on a daily, and let's have a look. The most recent trade was here. This was the cross right in here, which I moved up on a gap, really didn't go anywhere, and then failed. And we would have been out of this with a small loss. Now, they're not all going to work out. I can tell you that. Well, our experience with this is that not only do we have more winners than losers, but our winners are usually much greater than our losers. But I'm glad Gio asked for this chart, because this here is a clear picture of just how challenging these markets have been, right? But within every mess here, like the toughest, one of the toughest parts of trading is trading throughout a sideways trend here, or what we call the chop. And this, with the rules we have around here, helps you avoid this. Now, there was a clean setup in here with this pullback, and there was a winning trade here. But the key here is that when you see a chart that looks this messy, ignore it. One of the best things you can do as a trader is trade on something that trends very nicely and has a clear slope lower or a clear slope higher. Let's have a look at a few more here. JP Morgan for Don. Let's look at JP Morgan here. Back in here, when it was trending nicely, you can see this is what we would call a double dip. There's that W pattern here, and this is what happened next. Nice, easy move higher here. It went from around 66 to a little over 69 before pulling back. And there's many ways to trade this too. You can certainly scale out as you go with multiple contracts, or if you're trading with a smaller account, even one contract you'll do very well with, because it only takes a couple $100 to buy a call option. The key is putting the odds in your favor and trading in a very safe manner, especially during these types of markets, and being able to pull out these safer trades. Let's look at some futures contracts. Who here trades futures? Let's have a look at a couple. One of the most popular ones has been crude oil. And this is what I mean by a cleaner chart, one that's trending better. And again, the key, look at that. Before each drop, you got nice clear move through the cloud with that slope, right? Then it's just a matter of waiting for the pullbacks. And off you go. You had first pullback here, and you had your setup right in here, okay? If my mouse will work, there we go. And then you had a flush lower, boom, nice trade, nice pullback. And here you get a double dip pattern. Some of them are even triples when that happens, but the point is, look what happens next, right? Bam. That's what you want. If you're ever in a flat MA here, just because you get that cross, ignore it. Don't take it. It doesn't matter if it goes on to be a winner. You want to put the odds in your favor and trade the safe way. And sometimes waiting for that pullback or that RSI to come all the way back to that 50 line means you miss a run. It doesn't matter. There's plenty of charts, plenty of trades out there for you to go through. There was for those of you who trade futures, I'm sure many of you have seen that recent move on soybeans. Let's have a look at soybeans. Boom, right in here. Well, what did we get? If you look at this closely, let me highlight this. You came through that cloud with momentum here, okay? Through that cloud with momentum, you get a nice move, then you get a nice orderly pullback. What happens? Look at that, as clean as it gets. Beautiful W pattern, right? And whether you took the first one here or the second one, really didn't matter. The point is, this was the result. Bam, in your favor immediately, and a nice one run. Still be in that one. Beautiful move. And again, the time frame really doesn't matter. Let's look at a few of the big name players here. Here's Nike. And again, a messy chart, right? Completely ugly, messy chart has come through that cloud now with momentum. This is one of those ones that you want to put on your watch list, okay? Right in here. Because if this comes down a little more, pulls back, and still has that momentum, still has that moving average sloping lower at the time, and the RSI crosses, bam, you get a nice setup. And remember I said about weekly or monthly? Well, as you know, the higher the time frame, the more it smooths things out. And boy, do these work well on the higher time frames. Look at Nike on a monthly. Once it gains momentum here, there are several setups in here. There's one down in here. Okay, there's another one down in here, and this was your double dip. Boom, and that's what kicked off that powerful move. Look at that. Beautiful. And many of these, you know, you can also use other parts of technical analysis. Like if you look at something like this, you know, and say, here's a nice sideways channel. Boy, it consolidates for a long time. Then it breaks out of that channel. And you can see it starts sloping. Well, first pullback, boom, there's your setup, and off you go. So, and again, this is a monthly, it doesn't matter. It can be weekly, daily, 5-minute, 15-minute, it really doesn't matter. Another Dow component, Goldman Sachs. Many of you trade Goldman Sachs, I'm sure. And look at these moves here on the monthly. Now, right now, if you look at this right now on the monthly, would you be excited about what you see here on this chart? You should not be. Why? Momentum is negative. We are above the cloud, but momentum is still negative. We need to regain momentum here to the upside before we're going to look at this long, okay? But let's have a look at a daily chart here. And right here, nice clean one, right in here, boom. There's your setup from here. Look at this one, move through that cloud. These are some of my favorites. What does it do? And this is why, if any of you are not familiar with the cloud indicator, it also acts as support and resistance. So when you get that move and you get a pullback that retests the bottom end of that cloud, and at the same time, you get that cross, it's pretty powerful. And you can see what happened next. Boom. Okay? So it's a really easy strategy to learn and to use, and it can be extremely powerful. Now, you've all seen from many different examples how effective it can be, but there's actually a way to make this even better. And we've put together a pro training course on this that actually builds on what I taught you here tonight. You can go to tradingwins.com/simple. That'll get you here where you'll see all the details. Let me just highlight a couple of the key points to this. So in this class, it's an on-demand recording, about 2 hours, full of content. And I go over the complete system from entry to exit, but I've seen questions on the exits. And in this class, I not only cover one, not even two, but 6 different exit strategies. So there's something for everyone. I've coached thousands of traders and everyone has a slightly different style, and that's why we teach 6 different exit strategies that make this easy to use no matter what kind of trader you are. But we do focus and concentrate on the one exit strategy that we use the most. Now, these next 2 points here are extremely important. During this class, I'm going to teach you a very unique way of spotting the most significant areas of support and resistance. I've only seen one other trader do this, and he's extremely successful. But I'm also going to teach you 2 Fibonacci tools that'll help you pinpoint the entries and set your targets. But it's the combination of these 2 that make all the difference. That's how you take the system to the next level. This will help you separate those very high probability setups and differentiate them from the average setups. Now, as a bonus, I told you about that Ichimoku Kinko Hyo indicator that I can't even pronounce, but is very powerful. Well, as I said, it's normally used as a strategy on its own. I'm going to teach you how to use it as a strategy. So we actually teach this as a separate class. We're going to throw that in, so it's like getting 2 classes in one. Okay? And as a real bonus, we're also going to throw in a 30-day membership to our pro service, which gets you all of the trades that I highlight for our members in our nightly videos, our market recaps, as well as my favorite part, our live weekly chats. We meet twice a week, once on Monday evenings, 8 p.m. Eastern, 5 p.m. Pacific, and then every Thursday morning, 10 a.m. Eastern, 7 a.m. Pacific. You get to come into our room and not only ask me questions about this strategy, but anything trading related. My job is to help you become a better trader. So we normally sell this course in our store for $297, as I'll show you here. But we wanted to do something special for all of you. I want to thank again Steve Bigelow for bringing me in and hosting this event and having all of you here. So we've never actually sold it at this price, but we're really excited about everything happening at Trading Wins, and we want to show you what we can do. And we've made this whole package available to you for just $47. Again, the link is tradingwins.com/simple. Now, I'm sure there's many questions there. I'm actually going to bring in our coaching coordinator, Raul, to help me read some of them off so we can get through as many as we can in the few minutes that we have left. And also, if you have more symbols you want me to look at, I'd be happy to bring up my charts again and show you. So let me just switch over the mic here and invite Raul in. Raul?
Vince, I am impressed with your pronunciation of the Kinko Hyo.
Yeah, I'm not.
Always a struggle, but always a pleasure to hear it done properly. Some of the questions from earlier, Vince, the cloud settings that you're using for your demo were what?
Oh, the cloud settings are the default settings. The 9 and 26 settings, those are the defaults. And sorry, I don't know that I mentioned the RSI setting. The RSI actually, for most charting platforms, has a setting of 14. We like a much more responsive RSI, so we reduced that in half. We have a 7-period RSI, okay?
CK is asking, does this include the indicators as well? So the indicators, you're going to sell, all the settings will be,
right.
Teach them that in the...
Yeah, then the indicators are widely available on most charting platforms anyway.
Tradingwins.com/simple, the link is in the chat box. You said this course, the pro course, builds on what you've already taught.
Absolutely, yeah.
How much of that is options training?
There is a component on options, so I'll tell you how I trade this with options. In other words, I will tell you how far out I go with an expiration depending on the time frame I'm trading, what kind of delta I'm looking at, when I would buy a call or a put versus selling a credit spread, all of that. We cover that in the class.
And how do you use the Fibonacci tools to make the system even better?
You know, they are meant to help you identify areas of support and resistance. And along with the other method that we teach, these will really help you pick precise entries. And again, the real difference here is that if you add these, you're really stacking the odds in your favor, and you're selecting only the highest probability setups. And that is really the way you want to trade this.
In terms of earnings, I know Amazon reported big earnings today.
Absolutely.
Would you consider a play on Amazon tomorrow?
Maybe. I mean, it all depends on the setup. I'm pretty sure we'll have to wait more than one candle to identify that setup. But in the days to come, we may. Again, it all depends on the basics. Do we have trend? Do we have momentum on our side? Is it pulling back? And then, you know, we'll incorporate the fibs and the other support resistance. And if there's a setup, we'll be all over it.
For the folks, I'm just watching the comments, that the ones that just order your course will be delivered in less than a half hour. Your membership will be set up by tomorrow. You'll be able to start accessing our library of videos. How far back does that library go?
Oh, geez, I don't even know. What is it, a couple, 2-3 years? A few years now.
Yeah.
There's literally hundreds and hundreds of hours of video on there for you to watch at your leisure. Absolutely.
You mentioned Ichimoku Kinko Hyo for even better accuracy.
Yes.
How do you do that?
Well, what I showed in charts was a stripped down version. Usually when you plot that indicator on your chart, you have several other lines that will help you select your entries, your exits, and identify areas of support and resistance. And so I'll teach you how to do that with just that one indicator. So it's a bit of a bonus. So if you ever want to trade with just the one indicator, you'll know exactly how to do that.
For the folks that are new, you will be getting a 30-day complimentary membership to our pro service. At the end of the 30 days, what happens?
At the end of 30 days, if you're enjoying it, you don't need to do anything. It'll automatically renew at $97 a month. But if for whatever reason, if you'd rather not continue, just give us a call before the 30 days are up, and we'll put a stop to it. We always refer to it as the world's easiest cancellation policy.
Somebody had asked earlier, what's your favorite time frame to trade with this system?
The longer time frames and the dailies where I've focused most often recently, but from an intraday perspective, the 15-minute and the hourly, especially the hourly, I love with this.
Your favorite markets to trade with this? Stocks, options, stock futures, forex?
All three, basically. I mean, you know, I do more equity than I do futures and forex, absolutely, but there's no difference really. I'll go wherever the trend is.
I know you mentioned this in the past. The trend is your friend.
Until it's not.
Until it's not. But the great thing about the system is it bases its triggers and setups on the fact that the trend is in your favor.
Yeah, I mean, that's the thing. The way we structure it is that if there is no trend in place, you don't take that trade. So you don't make trading difficult on yourself. You make it as easy as it can possibly be.
There were a few requests for symbols. I don't know if you've got time to do those.
Yeah, as long as we have time left, I can certainly bring up my charts and go through a couple more.
I'm going to go to Don here. He was asking for FCX.
Okay. FCX?
That's right.
FCX. Yes, Freeport McMoran. Now, this tends to trend nicely, and you can see back in here, and again, please don't forget this. This is one of the things that many people, you know, when they first start trading with it, get excited and are so focused on the rules that they overlook this. Do not overlook the cross from one side of the cloud to the other with slope. It really does give you a heads up to what's coming. Here's another one, and this was a nice, easy pullback. I also do want to tell you that it doesn't matter how long the pullback lasts for. It may be 1-2 bars, it may be 7-8, it really doesn't matter. What matters is that the slope is still intact when you get that cross back below that midpoint on the RSI, and that's what happened next. Now, right now, you can see we're starting to regain momentum. We are above the cloud. We're sloping higher. All we're looking for and waiting for is some kind of pullback, right? And then we want the RSI to move below and back above, and at that point, we'll be ready for another move to the upside.
Bob is asking for ANF.
ANF. That's Abercrombie, yes. And look what's happening right now with Abercrombie, right? So price is already through the cloud. If the moving average finishes going through, this continues lower and then bounces, we may have a great setup to the downside. And if you look at the overall markets, I mean, I've been calling for a rollover in these markets for a while, and I still believe it's going to happen. But when it does, you're going to get a lot of situations like this. And if you build a watch list of stocks that come through that cloud with momentum, boy, you'll be able to pick off some beautiful setups when the downturn gains steam. So this is exactly what you want to look for. Here was another nice one right in here. So you'll see that to confirm that trend and that momentum, you will miss some of the moves sometimes. It doesn't matter. You want to catch the safe, high probability portion.
Karen was asking for LNG.
Let's have a look. And this is what I meant earlier. So if you can build a watch list of stocks that have a clear trend one way or the other, okay, beautiful. But what kicked it off? Move through that cloud, and then look at these pullbacks. Look at these pullbacks. Look how many there were. Now this area went flat. You didn't want to trade that, right? But when you do have trend in place, look at these. Boom. I mean, are they worth waiting for? Yeah, absolutely they are. And right now we're starting to regain some steam to the long side as well.
I wanted to talk to you about confirmation. When you're trading a daily time frame, should you be considering a weekly chart as well to confirm?
What we found with the strategy is that it's not absolutely necessary. It's strong enough that you can trade it off the one time frame if you like, but certainly it's always better to confirm on multiple time frames, and especially in the type of market environment we're in now, where many charts are mixed on the time frame. So if we look at the weekly here on LNG, you'll see that we're still pointing lower. We still have momentum lower, yet the daily is now back above the cloud and turning higher. So, you know, in a volatile environment, the last thing you want to do is trade with mixed signals. It's always safer to have both in your favor. But during strong trending markets overall, it's really not that necessary.
Somebody, I'm just trying to find out who it was asking the RSI setting. It's a 7, that's correct?
7-period RSI, yes.
Okay. When you're trading the system on a smaller time frame, are the exits treated differently than on a on a longer time frame?
No, the rules remain the same. The setup is the same. It doesn't matter whether you're on a 5-minute, a 15-minute, a monthly, or whether you're trading a futures contract, a forex pair, or a stock. It really doesn't matter.
In terms of account size and being able to trade this, you know, when not everyone can buy 100 shares of Amazon,
no,
or Google, excuse me, Alphabet, etc. Can you trade this system with a small account?
Absolutely, and especially if you're trading options. I mean, the whole point of this is to be conservative and wait for those safer areas and build your account one trade at a time. And so whether you're starting out with one share or one option contract, or whether you're starting out with 1,000, it really doesn't matter. I mean, obviously, the more money you have, the quicker it will be, and so on. But you'll be surprised at how quickly you can grow an account when you're trading with the right strategy.
Vic was asking for INFN.
Sure. So right now, off earnings, you can see a significant gap lower. So certainly momentum is going to gain steam here to the downside, but we're going to have to wait for a pullback here. And the other thing I want to tell you is you want to take trades closer to that moving average, right? You don't want trades that far away. So right now, this one's going to be several days away before we get another setup. But that's what you want to wait for. So don't get over anxious and jump in. Wait for a proper setup.
You'd mentioned in the past when it comes to earnings season and you're afraid of trading earnings, you trade ETFs.
Sure. I mean, well, ETFs, Forex, anything that isn't going to be affected by an earnings announcement, right? So happens a few times a year, but luckily, and nowadays, there's so many issues out there that we have available to trade that it really doesn't become a problem.
That reminds me of something that Jim Cramer used to say. There's a bull market out there somewhere.
Exactly.
I'm going to help you find it.
That's
in
right.
this case, you don't even need a bull market. It can be bull or bear market.
Yeah, because, there's, as they say, there's always a bull somewhere, right? You'll be able to squeak out a trade somewhere.
You talk a lot about rules. How important is it to follow the rules? Can you bend them? Can you add things to it?
No, sure you can bend them, but you're every time you bend them, you're taking on additional risk, which is unnecessary. Your goal as a trader should be to become as consistent as possible. You need to focus on execution. Don't focus on anything else other than execution. I can tell you we've traded this for many years, and it's very reliable through all types of markets. So you'll gain confidence with it as you trade with it yourself, but you really do want to, as a technician, find something that has been proven to work and then just repeat it. So I always tell my students that trading should actually become boring, because when it is boring, it means you're profitable in most cases. So rinse and repeat, that's what it's all about.
I think we've just got a few more minutes left. I'll ask you to bring that offer page back up, recap.
Sure. Let me just bring that up here. So again, this course builds on what I taught you today. And what we're going to cover in this course is the complete system, again, from entry to exit. I will teach you 6 different exit strategies, but show you the one that I use most often. I'm then going to show you a unique way to identify the most significant areas of support and resistance, which by itself will help you with any strategy you're using. Trading with support and resistance is crucial in my opinion. The Fibonacci tools, which also do that, in accordance with this, in conjunction with this, work beautifully. And in that class, I'll go through many examples. Again, as a bonus, we've added in how to trade with that Ichimoku indicator on its own, and you're going to get the 30 days of membership, where you'll not only get our nightly videos 5 days a week, along with those market recaps and the trades that we put out, but also be able to join us live twice a week in our on our live sessions. Okay, and the link for this is tradingwins.com/simple, and it's the whole package is just $47. All you have to do is click the big green bar here at the bottom. So again, I want to thank all of you for joining us, and I especially want to thank Stephen Bigelow for allowing me to do this, and I'm really hoping to see you in our room in the near future. Steve, I will turn it back over to you.
All right, Vince, thank you very much. Very good stuff. Everybody, you're going to get obviously way more than your money is worth on the special. So take a look at his information. This is just common sense investment techniques put into a program that has consistency to it. And that's basically what we're looking for as far as staying in good, profitable trade setups. So with that, Vince, lots of good information. I appreciate you sharing it with us tonight. So with that, everybody,
so
have
much,
a good
Steve.
evening. Yep. Thank you for being here. All right, everybody, we will see you in the chat rooms. Thanks.